Good afternoon, traders. Very interesting day in the markets with the CPI number coming out a little bit weaker. News is month over month it came in at 0, but month over or year, I think it came in at 8.5. So still quite elevated. Now, the other big news today is we've had a change in the system, the rotational modeling system. The ES, the YM, the industrial average, and the transportation index have now moved positive, bullish, long-term, short-term. Let me resize this so that you can actually see it more effectively. But this means that we are now looking at a longer-term or intermediate-term uptrend. What you need to be aware of is that the SPY is still neutral. Oil is now neutral, long-term bullish, short-term bearish, and the NASDAQ is still long-term bearish, short-term bearish. So what does this mean for us as traders? It means that we're seeing early warning signs that the market may be rolling into a new bullish trend. And that's a good thing overall. We may see some stability in the U.S. market going forward, but I'm going to urge you that we are going to wait through the end of this week. We're not going to make any major changes trying to chase into this trend yet. There will be a lot of rotation yet to come. So this is the ES. You can see we've got our new bullish trigger right over here, the green trigger on the right side. But I want you to pay attention to the fact that no matter what happens, we've got a lot of news coming out. We've got a lot of data coming out with jobs. We're going to wait for this because we may still see some rotation before we see some real upward movement here. And we are going to be cautious of this bigger, broader downturn trend. Remember, here's the weekly chart up here. We have still a high way up here that is acting as a critical resistance level. We have a high back over here that's kind of doing the same thing. Sorry, my lines aren't straight. And we're just, we also have a double high back over here. And we have another high right over here that we're just dancing around with right now. So even though the system is turning positive, we're going to stay very cautious of this move. As you followed my weekly update, we're still fairly cautious about what the Fed may have to do with regards to inflation. 8.5 CPI number is a huge number. Even though month over month it was flat, we still have quite a bit of concern in the global market. And like I said, when you really take a look at this, here I'll go to a monthly. And when you really take a look at this, we have, and I know it's kind of hard to see here. Maybe I can move it down. Come back over here. What did I do? Auto scale. I don't know what I did. Oh, they're huge. Okay, hold on. Yep, I spread it out. So we're going to come back, try to put this back. And what we're going to do here is we're going to take a look at this from a monthly standpoint. And you're going to see here that we still have some very big bars, very big downtrends moving down. So we're not anywhere close to a new upward move yet, in my opinion. We are seeing support, so we're going to get close to seeing something maybe in the future, but we have to stay cautious here. This daily trigger is still yellow. It's still neutral. We could see some rotation, and we need to see it really confirm. So now the NASDAQ is still bearish. Take a look at the NASDAQ here. Still bearish weekly, bearish daily. The YM is bullish weekly, has just turned bullish as the close of today, the 10th of August. So we're now looking for some opportunity in this trend. The SPY is still bearish daily, getting very close to potentially turning bullish. Yellow triggers here. The IYT transportation ETF is got a warning sign here, indicating there it is, bullish. There's the bullish trigger. That's now a bullish trigger confirmed at the end of the day. We have a bullish trigger in the IYT. It is still bullish daily, bullish weekly. And let's come over here and just check SSO. SSO is still bearish. Let's come down and check TLT. Bearish still. And lastly, let's check real estate as an update here. Real estate is bullish weekly, bearish daily. No sign of life yet over there. So we need to stay cautious of this trend. We're going to start looking for some opportunities, maybe add a little bit more into stocks. But ideally, ladies and gentlemen, we just need to see how this plays out because this could be a false trigger. It's a very strong run up. The market likes to try to run up and test stop levels, test trigger levels. It was a very strong move off of moderately weaker CPI data, which tells me that it's looking for some strength and a pause of the Fed. But I really don't believe the Fed's capable of pausing right now with 8.5% CPI. We're going to see how it plays out. It's a good trigger. I just want you to stay cautious through this because I don't want anybody loading up in this market right now and then regretting it two days or 2 weeks from now when it just collapses through the roof or through the floor and heads lower, which is still a very strong possibility. All right, I'm going to update everything, post it up in the members area, and let's see what happens the rest of the week and next week.